Hey, it's Similolu here, and in this video I'm going to go over how you can make consistent profit using support and resistance levels. Now, trading without your support and resistance levels is akin to trying to get to a destination you've never been without a navigation system. Having your levels on your chart gives you better understanding of how and when to enter and exit your trades to ensure that you maintain consistent profits. Now, we all know that trading is a game of wins and losses. It's a question of how many wins you can make versus how many losses. So of course, to come away with profit, you need to have more wins than losses. And this is exactly what support and resistance levels help you do better. They help you enter and to exit at the best point to ensure you maximize and retain your profits. So without further ado, let's get right into it. Looking at this diagram, you can see that all the price action is occurring above the support level. Even when price comes all the way down to the support level, there's that high likelihood that price action will simply bounce off it and price activity will continue above the support level. This price point or price level is considered an area of support. In this situation, we see that price action is all happening below the resistance level. Even if price action goes all the way up to the resistance level, there's still that greater likelihood that there will be a bounce off and that price activity will continue below this level. So that price point or price level that makes it difficult for price activity to go above it is called the resistance level. Support and resistance levels are used to study past prices and predict future market moves. Just as we'd have road signs strategically placed on a road to ensure the driver gets to his destination safely, so also we'd strategically place support and resistance levels on our price charts to better enable the trader to accomplish his goal of making profit. So I'm going to draw support and resistance levels on this daily Netflix chart. And what I'm going to do first is I'm going to look for the lowest point to the left of the chart. I'm going to start and draw a level at the lowest point. Now we have the lowest point right here at the bottom of the wick, but with drawing levels, you're trying to get as many occurrences where the candlestick or the candlestick's wick touches your level. So instead of drawing it right down all the way at the bottom here, I'm going to move up a bit and I can see 3 candlestick wicks touching this particular price point. So my first level goes there. Right here, I see about 5 touches. So I'm going to put another level right there. So raising the level bar, this is actually a very good level because I see quite a few touches on this particular price level. So there goes another line. And we basically keep this up, starting at the left of the chart and looking to the right to see if there's any connections, especially of the upper or lower bodies of the candlesticks. So this is pretty good as it is. This is a manual way of drawing in support and resistance lines. There's a more automated way of doing it using Fibonacci levels. If you want to find out how to use Fibonacci levels to draw your support and resistance lines, then make sure you watch this video that I've made on it. Now we have our support and resistance levels drawn. I'm going to move from the daily chart to a lower time frame. So I'm going to go down to the 15-minute. And the market hasn't opened today. And this is yesterday's chart. And looking at yesterday's chart, I'm going to draw some more levels. So I'm going to draw the high of yesterday and the low point of yesterday. I'm not going to bother drawing because there's already a level right here. I'm going to color code it so I can identify it as a high of the previous day. The next thing I'm going to do is I'm going to attempt to draw the highs and the lows of the pre-market session. Again, I'm going to color code it. With pre-market session, I usually use these dotted lines just so I know it's pre-market session. And right here, I have my support and resistance lines ready for me to trade. Trading through the day, I'm going to be observant of these lines. Looking at what happened yesterday, we can see that this great big green candle approached this area, broke through it, and looking along, you can see further in time during the pre-market session, that level was respected again. So price action was coming down, but when it saw the previous level set yesterday, it bounced right back off it. So the market retains the memory of those levels, and you're better able to use these points to inform your trading as far as entries and exits out of your positions. So these support and resistance levels that I've superimposed over my charts is going to help me in my trading to understand the various price points at which there's a lot of buying and selling activity. For instance, with price approaching this blue level, we see a rejection of price. This green candle couldn't quite make it over. This candle was green, attempted to make it over, but again got rejected at this blue level point. And through the day, price action could not get past this particular level. So this is a strong resistance level. So in trading today, I'm going to be looking out for this level. The minute price action breaks above this blue level, that would be a good signal for me to enter into a long position. Also, if price action were to drop below this lower level, then of course that would be an indication for me to go short or to get out of my long positions. One thing that's worth noting is once price action breaks above resistance, as it does right here, then that red line that was resistance now becomes support. If you recall, the definition of a support line is one where price action operates above it. So all of a sudden, the resistance, what was resistance, now becomes support because price action has moved above it.